Yo, what's going on, ladies and gentlemen? How in the God's green earth is everyone doing on this fine Monday morning or Sunday night, depending on when you're tuning in? You know what is hysterical to myself, and I'm kind of proud of myself. Well, maybe not. But anyway, I didn't even realize the damn market wasn't open until tomorrow, until about an hour ago. Now, the reason why I say I'm proud of myself, maybe, just maybe, I have proven to myself that I'm not paying attention to the stock market as much as I should. Or is that a good or a bad thing? I don't know. But either way, the damn market's closed tomorrow. So, yeah, we have another free day of relaxing. Not a lot of stress this weekend. Not a lot of FUD going on. Of sure, the normal crap, right? But nothing too crazy that I have seen. Let me know if you guys have seen anything absolutely chaotic out there. I have not, which is good. Couple pieces of news today out here on the world of Citadel and Ken Griffin. Something pretty funny, a funny comment, a funny article, and then a funny ending that's kind of got me thinking, hey, we're a little bit more risky than we should be over there at Chicago, Illinois. And across the entire global planet is the monster Citadel. And then if something funky going on at Credit Suisse, beautiful weekend in the box office once again. These Q4 numbers are going to be outrageous. I'm excited to see those. Yeah, let's get this thing fired off. So no market tomorrow or this morning, depending on when you're firing off. I did not even know that till an hour ago. That's outstanding. Proud of myself. Fintel, why the hell did I have this? Oh, I was going to touch on the damn DNB Asset Management joining the party here with a few shares down here I see note added to it. So that's good news. Not a lot else here in we touched on that back to December. So yeah, they're joining the party. Spider-Man No Way Home tops 1.6 billion worldwide and becomes biggest movie ever in Mexico. Scream shouts out with 49 million globally. I noticed Scream had get this crap out of here. I noticed Scream had I hate that cookies crap, dude. God dang it. 30 million here in the United States of America with Scream. I didn't realize that was out till Friday. So we're raking in the ducats here. 1.6 billion worldwide is a lot of money, obviously, right? So that is absolutely great news for AMC. This article here, this was pretty cool. A year after GameStop, Wall Street is still scared of the power of retail traders and is tracking them closely. This is good news for us. Sure, we're waiting for our short squeeze money on any beloved shorted to shit stock out there, whether it be AMC, GameStop, Bed Bath and Beyond, BlackBerry, any of them, even stocks we've never heard of in the penny stock, whatever, blah, blah, blah. They're tracking us, boys and girls. That was a monstrous deal, and we are on the 1 year anniversary, damn near, of the buy button being taken away, and basically a year anniversary of the whole shit show that started last January, right? So they're watching closely, obviously. A year later, Wall Street remains wary of the power of retail traders who can shift markets in a moment. Yes, we can. We're the largest hedge fund out there, boys and girls, whether you want to believe it or not. But it's adapted to the world, and many pro traders are even copying amateur investor moves. What are they doing? Going to Reddit? This I like this here. After GameStop's, many more pro investors look to incentivize data to help manage the risk that their investments are about to fall foul of a retail trading frenzy. This is good stuff. This is going to be good moving forward. It doesn't have to do with our short squeeze money right now, but still, it's a big deal for these guys, and they can track it all they want and do this, and most of these guys short the shit out of stocks. But long story short, we've made a monstrous ordeal over this whole last year, to say the least, right? And we're not even done. We're not even close to done yet. Meet the Elon Musk of money. This is a financial review article here. This is pretty funny all the way until down the very end. This first, right below the header here, cracked me up. Kenneth Griffin has annoyed meme stock and cryptocurrency traders on his way to turning this hedge fund Citadel into personal wealth of $4 billion. Okay, let's go. Everything we've known and read and I've shared, anybody has shared over the last year about Ken Griffin, just how badass he is, right? man of his times, blah blah blah, which is very true, right? So this whole article goes down of all of his accomplishments, right? Everything he's doing, billions and billions of dollars, Citadel, blah 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 blah. Okay, good. More respect than loved. He's respected, feared. Right. We get it. Then down here, and we touched on that video too, where he barely made it out years ago, right? Remember, a few years later, it almost came crashing down. Despite a reputation for avoiding mistakes, Citadel lost an astonishing U.S. $6 billion in the financial crisis. It was eventually forced to freeze investor withdrawals, often a death knell. Now, all of this is great, right? But when you get over leveraged, super risky, how many times leverage? They're at least 8 times over leveraged, these fine folks over here, right? One little mistake, one little financial, right here can end everything. Now, did it then? No. They were almost busted to shit, but they came back, and they came back even stronger. Fast forward until now. The whole way, the over leveraged repo market, all of the stuff that's going on in the stock market, one little tiny mistake and the whole thing goes collapso. And that goes with everything, right? But still, the whole nice, beautiful, long article of Kenny G, and then, oops, almost just came crashing down. Fast forward until 2022. Will this be it? I don't know. We're going to most certainly find out here, right? Shout out to Basic Ad 4976 on the old Super Stonks page. I'm sure most of you guys have seen this interview, the West Christian David Wenger video. At this 9, I'll pop it in if you guys want to listen to it, about the 9:40 mark, and it goes up a few minutes here. But long story short, TLDR on this here, ShareIntel as a patented software that can identify a company as being shorted, creating synthetics, and is counterfeiting shares by how much and by whom. This show how much our shares are being diluted. $50K for a yearly subscription. If shareholders make enough noise, the board will likely employ the group, turn the security camera to start logging and identifying the amount of shorts and the ones doing the shorting. Okay, $50K a year. Somebody has to have access to this. Why aren't we doing this? Let's get a GoFundMe going for this here, right? You think... You would think that this would... Why don't we hear more of stuff like this? I mean, is this real? I'm sure that it is. I would like to know the results of that, right? Obviously. I'm going to do a little bit more digging on this, but this had me intrigued, this whole article. I'll pop this in if you guys want to really... If you see the video, obviously it's about 9:50 in. But yeah, I want to know more about this whole thingy-McBobber here, right? Could be a big ripper deal. This is a little suspect, to say the absolute least here. Credit Suisse chairman quits over COVID-19 breaches in latest setback. Okay, Credit Suisse chairman quits over some COVID thing. Now, how does this hit the news, right? But long story short, just this. I'm not paying for this damn ad. Credit Suisse chairman Antonio Horsta Osorio has resigned after flouting COVID-19 quarantine rules, the bank said on Monday, raising questions over the embattled lender's new strategy as it tries to recover from a string of scandals. How would this get leaked out there? I think, you guys, there's a little bit more to the story out there. I think so, right? Jesus, Murphy. So yeah, let's keep an eyeball on that. I'm going to dig a little bit deeper into this damn thing. If anybody knows anything more about it out there, let me know. And then we got Citadel. What else we got? Yes, us, videos. That's about it. On the way out the door, if you guys need a little bit of humor, I'm going to play this. It is absolutely hysterical. It's John Kennedy grills Biden Federal Reserve nominee on inflation. Hysterical. Reminds me of 8-9 months ago when the hearing was, the guy that went nuts on Kenny G, when Kenny G kept avoiding the answers to the question he had. Very similar situation, but also talks about where the market's at right now with this whole inflation crap show that's out there. So another day off tomorrow, you guys. Let's enjoy it. Short week coming up. We got the monthly expirations on Friday, January 21, 2022. So let's see what this brings. It can't be any worse than last week. Knock on wood. Maybe, hopefully, I didn't say the wrong thing there. But you guys, we got to start going up at one point. These stocks cannot continue to go down and down and down as much as they're held. Blah blah. You know the drill, right? So onward and upward. All right, guys, I'll talk to you later, but take a listen to this damn thing. It's hilarious.
Chester. Senator Kennedy from Louisiana is recognized.
Thank you, Mr. Chairman. Governor, Director, congratulations on your nomination. Governor, I realize at the Federal Reserve that you have a big staff that advises you on inflation. And based on their track record, my guess is they also advised people to buy condos in Las Vegas in 2007. But you don't have to accept their advice. So, with respect to your predictions on inflation, how did you get it so wrong?
Well, Senator, thank you.
Could you move closer to the mic for me?
Yes, of course. Thank you for your question, Senator.
You're welcome.
So I think, nobody got the pandemic right. The pandemic is unprecedented.
Yeah, but I'm asking you about inflation.
Yeah. So I think as forecasters, private forecasters, certainly the forecasters, the SEP, the whole committee, we thought that perhaps we would see a more rapid resolution of the pandemic and the supply-demand mismatches, so in particular in cars.
Excuse me for interrupting, but I don't have much time. Do you think are you saying that inflation was caused by the pandemic?
So we certainly have seen the perpetuation, for instance, of the Delta variant leading to
yes, ma'am. But are you saying that the inflation is caused by the pandemic?
I certainly think the supply-demand imbalances that have been the biggest contributors to the very high inflation we've seen are directly attributable to supply chain issues, distortions in demand.
Well, but here's what troubles me about that. I'll agree that inflation is spreading, but I don't see people going around coughing inflation on each other. I think, and I understand supply chains matter, but so does the demand side, and so does too much money chasing too few goods. And I don't think, and I don't think any fair-minded person thinks that inflation is solely the result of the pandemic. Let me move on. Do you think that federal regulatory authorities should use their considerable power, not just the Federal Reserve, but federal regulatory authorities? Do you think they should use their considerable power to discourage private banks from lending money to oil and gas companies?
No.
Ma'am?
No.
Okay. Do you think that those federal regulatory authorities should use their power to discourage private banks from lending money to gun manufacturers and dealers?
It's not our job. We don't tell banks what sectors to lend to. We just ask them to risk manage, and we make sure they have good processes in place.
I agree with you, and I thank you for that. Will you issue a statement to that effect if you're confirmed?
Well, I certainly have made that statement. We'll continue to make.
Yes, ma'am. Would you issue a separate statement saying, I want to make it clear for what it's worth to all of my colleagues in government, I don't think that you should use your power to discourage private banks from lending money to oil and gas companies and to gun manufacturers.
Well,
will you do that?
Well, I won't tell other regulators what to do, but I will be happy to talk about what we do at the Federal Reserve, what our statutory authorities require us to do.
Okay. I'm going to follow up with you on that. Okay?
Senator?
I take that as a yes, and I'm looking forward to that statement. Director, gosh, this is America's debt. I'm not going to have time to ask you about it because I want to ask Director Thompson a quick question. Yes, Director Thompson. Madam Director, are you familiar with President Biden's risk rating 2.0 pricing scheme for the National Flood Insurance Program?
Sir, I'm not familiar with the details of that program.
Well, I need you to take a look at it. You talk about affordability. President Biden is about to make housing for at least 5 million Americans unaffordable by raising their flood insurance from $1,000 a year to $5,000 and $6,000 a year, and you're going to have a problem. Real quickly, Madam Governor, do you think we got 4 big banks? They have market share between 30% and 50% in the greatest economy in all of human history. They're not really banks, they're countries. Do you think economic power is too concentrated in those 4 banks?
Well, I certainly think that from a financial stability point of view, when you have very, very large institutions that are systemic, you need to have very, very big capital buffers and liquidity buffers and risk management, because it would be very, very difficult to resolve those banks in a moment of financial stress.
Okay. Thank you, Mr. Chairman. You've been
Thank you,
very,
Senator Kennedy.
very kind with your time. My office will work with you on that.
Why are those so uncomfortable and awkward, but just humorous? I love all of those. They're just great. Okay, you savages, get some rest, stay hydrated, proteined up, all that good stuff, and we will see you tomorrow. Later.